Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price consistently rising over the past few weeks. The forecast price also suggests continued upward momentum, with prices expected to reach $107,000 in the coming weeks. This positive price action, coupled with the long-term bullish outlook, indicates that buying and holding Bitcoin for the long term could be a profitable strategy. Therefore, I recommend entering a long position at the current price of $100,000. A stop-loss order should be placed at $96,500 to protect against significant downside risk. This stop-loss level is below the recent price dips and provides a buffer against potential market corrections. The target price for this long position should be set at $107,000, aligning with the highest forecast price. This target price offers a substantial profit potential while remaining within the realm of realistic price movements. Given the historical price data and the one-week price forecast for Bitcoin Cash, a short-term investment strategy appears to be the most suitable approach. The price has shown a recent upward trend, but the forecast suggests a slight pullback in the coming week. This suggests an opportunity to enter a short position, aiming to capitalize on the potential price decline. A suitable entry price would be around $570, aligning with the recent price action and the forecast's midpoint. The stop loss should be set at $580 to protect against unexpected price surges. The target price could be set at $545, allowing for potential profits while staying conservative. This strategy leverages the short-term price fluctuations and aims to capture a modest gain within a week. Based on the provided stacks price history and forecast, a medium-term investment strategy appears to be the most suitable. While the recent price action shows some volatility, the forecast suggests a gradual upward trend. The historical price data reveals a support level around $2.179 and a resistance level at $2.39. Considering this, an investment strategy could involve entering a long position at the current price of $2.31, aiming to capitalize on the potential upward movement towards the resistance level of $2.39. A stop-loss order could be placed at $2.18 to protect against significant downside risk. The target price could be set at $2.67, aligning with the forecast and providing a potential profit margin. This approach allows for a balance between risk and reward, capitalizing on the expected price appreciation while mitigating potential losses. Based on the provided price information for Ethereum, a medium-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a general upward trend, with recent fluctuations suggesting consolidation around the $3,800 to $4,000 range. The forecast price shows continued upward momentum, reaching potentially as high as $4,220 within the next week. This positive outlook, coupled with the support price at $3,628.50, indicates a favorable environment for a long position. Therefore, an investment strategy for Ethereum would involve taking a long position. A suitable entry price could be around $3,850, slightly below the current price, allowing for a margin of safety. The stop loss should be placed at $3,650, below the support price, to minimize potential losses. The target price could be set at $4,100, aligning with the forecast and providing a reasonable profit target. This medium-term approach allows for capitalizing on the anticipated upward trend while managing risk effectively. Given the provided Ripple price history, forecast, support, and resistance levels, an investment strategy focused on the long side appears to be the most promising. The historical price data reveals a fluctuating trend but generally suggests an upward movement. The forecast further strengthens this outlook, predicting continued price growth over the next week. The support price of $2.2056 acts as a safety net, while the resistance at $2.5966 presents a potential target for profit-taking. Therefore, a long-term investment strategy would involve entering a position at the current price, around $2.42. A stop-loss order should be placed at $2.2056 to limit potential losses if the price unexpectedly drops below the support level. The target price could be set at $2.5966, aiming to capture the potential upside movement towards the resistance level. This strategy capitalizes on the bullish sentiment indicated by the price history and forecast, while also incorporating risk management measures to protect against potential downturns. Based on the provided price history and forecast for Binance Coin, a bullish strategy appears most suitable. The 2-week price change demonstrates an overall upward trend, with the price fluctuating around a support level of $676.79 and encountering resistance at $742.11. The forecast predicts a continued upward trajectory, suggesting Binance Coin could reach prices above its current resistance. Given this positive outlook, a long position is recommended. An aggressive entry point could be around $710, slightly below the current price, allowing for a potential entry before a potential price surge. A stop-loss order should be placed at $680 to mitigate risk in case of an unexpected price drop. The target price should be set at $760, aiming to capture a significant portion of the potential price appreciation predicted by the forecast. This strategy capitalizes on the anticipated bullish momentum of Binance Coin while managing risk through a well-defined stop-loss. Given the price trends and forecast for Stellar, a cautious investment strategy would focus on a short-term approach to capitalize on the potential for a price rebound. The historical prices show a downward trend, with the current price near the support level of $0.0968. The forecast suggests Stellar could remain range-bound, hovering around the current price point. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $0.5371. An entry price of $0.435, aligning with the recent price action, would be suitable. The stop-loss should be set at $0.425 to protect against further downside movement. The target price should be set at $0.506, slightly above the forecasted average price, allowing you to take profits before the price potentially faces resistance at $0.5371. This strategy aims to capitalize on a short-term price rebound while managing risk effectively. The historical price of Toncoin shows some volatility but a general upward trend, albeit with a recent dip. The forecast suggests a continuation of this upward trend, albeit at a slower pace. The support price provides a floor for the price, while the resistance price indicates a potential ceiling. Considering this information, a long-term investment strategy in Toncoin appears promising. To execute this strategy, we could enter a long position at the current price, around $6.35, with a stop-loss placed below the recent dip, around $5.90, to mitigate potential losses. The target price should be set above the resistance level, around $6.88, to capture potential upside gains. This strategy capitalizes on the historical upward trend and the positive forecast, aiming for long-term growth in Toncoin value. Cardano shows a fluctuating price pattern over the past 2 weeks, with both upward and downward movements. While the forecast predicts an upward trend in the coming week, reaching prices above $1.20, the recent price history indicates a period of consolidation and potential volatility. Considering these factors, a medium-term investment strategy appears most suitable for Cardano. An entry price around $1.18, slightly below the current price, allows for a margin of safety while still capturing potential upside. A stop-loss should be placed at $1.09 to protect against a significant price drop, aligning with the support price. The target price can be set at $1.27, aiming to capitalize on the predicted price increase. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. The medium-term perspective provides ample time for the price to move towards the target, while the stop-loss ensures that losses are limited in case of an unexpected market downturn. Given the price trends and forecast for Litecoin, a medium-term investment strategy focusing on a long position seems most suitable. The historical prices show a consistent upward trajectory, albeit with some recent volatility. The current price is near its support level, presenting a potential buying opportunity. The forecast suggests a continued upward movement, with prices potentially reaching the resistance level over the medium term. Therefore, an entry price of $115 would be advisable, aligning with the recent price dips and the forecast's upward trajectory. A stop loss at $109.37, below the support price, would protect against significant downside risk. The target price should be set at $134.87, near the resistance level, allowing you to capitalize on the potential price increase. This strategy aims to take advantage of Litecoin's medium-term bullish outlook and secure profits before it encounters significant resistance. Based on the provided price information for SWAYcoin, a bullish investment strategy appears promising. The historical price data reveals an upward trend, with the price consistently increasing over the past 2 weeks. The forecast also suggests continued upward momentum, predicting prices to rise steadily over the next week. This positive price action indicates a strong underlying demand for SWAYcoin, suggesting potential for further gains. Given this outlook, a long position on SWAYcoin is recommended. An aggressive entry price could be around $4.30, aligning with the recent price action and the forecast. A stop-loss order should be placed at $4.15 to protect against any unexpected price reversals. The target price could be set at $5, allowing for a substantial profit potential while staying within the projected price range. This strategy capitalizes on the current bullish sentiment and aims to capture the anticipated price appreciation in SWAYcoin. Based on the Aptos price history and forecast, a short-term investment strategy appears to be the most suitable approach. The price history shows a relatively stable upward trend, but the forecast suggests a more significant price increase in the coming week. This indicates a potential for profit from a long position if the price continues to rise towards the resistance level of $14.48. Therefore, an aggressive investment strategy for Aptos would involve entering a long position at the current price of $13, with a stop loss set at $12.28 to protect against unexpected price drops. The target price should be set at $14.48, aiming to capitalize on the full potential of the forecasted price increase. This strategy leverages the short-term bullish momentum while managing risk through a defined stop loss. Given the provided historical price data and the forecast for SE, a cautious investment strategy focusing on the short term appears most suitable. While the historical prices exhibit some volatility, the recent downward trend and the forecast suggesting further declines indicate a potential bearish outlook. The support price of $0.4164 and the resistance price of $0.6903 provide crucial reference points for determining entry and exit points. Therefore, a short position on SE is recommended. An entry price around 61 cents would allow you to capitalize on the anticipated downward movement. A stop-loss order should be placed at $0.672 to limit potential losses if the price unexpectedly rises. The target price could be set at 55 cents, aligning with the lower end of the forecast and allowing for a reasonable profit margin before reaching the support level. This strategy prioritizes risk management and aims to capitalize on the short-term price fluctuations while minimizing potential losses. Based on the provided Ethereum Classic price information, a short-term investment strategy appears promising. The historical price data reveals a fluctuating trend with recent price increases, but the forecast indicates a potential price plateau and slight downward movement. The current price is hovering near the resistance level of $37.06, suggesting that further upward movement might be limited. Therefore, a short position on Ethereum Classic is recommended. The entry price should be set at $37, aligning with the resistance level and anticipating a potential price pullback. The stop loss should be placed at $38 to limit potential losses if the price unexpectedly surges higher. The target price can be set at $33, considering the recent price fluctuations and the forecast's indication of a potential downward trend. This strategy aims to capitalize on the short-term price correction while managing risk effectively. Based on the provided information for Polygon, a medium-term investment strategy with a long position appears to be the most promising. The historical price data shows a general upward trend, and while there have been recent dips, the price has consistently rebounded. The forecast suggests continued upward movement, with prices potentially reaching above the current resistance level. Entering a long position at the current price, around $0.623, allows us to capitalize on this potential growth. To manage risk, a stop-loss order should be placed at the support price of $0.6037. This will limit potential losses if the price unexpectedly drops. The target price should be set at $0.7023, the recent resistance level, aiming to capture a significant portion of the projected price increase. This medium-term approach allows us to benefit from the potential upside of Polygon while mitigating risk with a well-defined stop-loss order. Based on the provided price history and forecast for AEVO, a medium-term investment strategy appears most suitable. The price has shown a recent upward trend, with a potential to continue rising according to the forecast. However, the price has also experienced volatility, as evidenced by the fluctuations in the historical data. This suggests that a short-term strategy might be too risky, while a long-term strategy could miss out on potential short-term gains. Therefore, a medium-term approach allows us to capitalize on the anticipated upward movement while managing risk through a well-defined entry, stop-loss, and target price. An ideal entry price could be around $0.515, aligning with the recent price action and offering a potential for upside. A stop-loss order placed at $0.495 would protect against significant price drops, while a target price of 63 cents, based on the forecast and resistance level, allows for a substantial profit potential. This strategy balances risk and reward, aiming to capture a portion of the anticipated price increase while mitigating potential losses. Based on the provided data for optimism, a bullish strategy appears to be the most suitable. The historical prices demonstrate a clear upward trend, with recent fluctuations indicating consolidation rather than a reversal. The forecast price suggests continued upward movement, reaching as high as $2.93 in the coming weeks. This aligns with the current price hovering near the support level of $2.493, suggesting a potential for further growth. Therefore, I recommend a long position in optimism for a medium-term investment horizon. An ideal entry price would be around $2.55, capitalizing on the current consolidation phase. A stop-loss order should be placed at $2.493, safeguarding against unexpected downward movements. The target price can be set at $2.80, aiming to capture a significant portion of the projected price increase. This strategy allows for potential profit while managing risk effectively. Based on the provided historical price data and forecast for STRK, a short-term investment strategy appears promising. The historical prices demonstrate some volatility but generally trend upwards. The forecast suggests further upward movement, indicating a potential for short-term gains. Considering this, a long position on STRK is recommended. An entry price around $0.725, slightly above the recent historical high and close to the current price, would be suitable. To manage risk, a stop-loss order could be placed at $0.711, the recent support level. The target price could be set at $0.775, the resistance level, aiming to capture a significant portion of the potential upward movement. This strategy capitalizes on the positive price momentum and allows for potential profit within a relatively short time frame. Given the price trends and forecast for Solana, a moderate investment strategy would focus on a medium-term approach. The historical prices show a recent consolidation after a period of decline, with the current price hovering near its support level. The forecast suggests a potential upward movement in the coming weeks, reaching towards the resistance level. This indicates a cautiously optimistic outlook for Solana in the medium term. Therefore, a long position is advisable to capitalize on the potential price increase. An entry price of $227 could be considered, aligning with the current price and the support level. The stop-loss should be set at $216, slightly below the recent low, to protect against a potential downside reversal. The target price should be set at $235, aiming for a moderate gain towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for Jupiter, a short-term investment strategy appears most suitable. The historical price data reveals a volatile period with fluctuations above and below $1.25. The forecast suggests a slight downward trend, indicating a potential pullback from the recent highs. The current price is near the resistance level of $1.2489, suggesting a potential for profit-taking and a subsequent decline. Therefore, a short position is recommended with an entry price around $1.24, a stop loss at $1.26 to minimize potential losses, and a target price at $1.15, aiming to capitalize on the potential downward movement towards the support level of $1.0505. This strategy allows for a relatively quick turnaround, taking advantage of the short-term price fluctuations while mitigating risk with a well-defined stop-loss order. Based on the provided price information for render, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, although with some fluctuations. The forecast prices suggest continued growth, albeit at a slightly slower pace. This indicates a positive outlook for render in the medium term, making a long position a viable option. An optimal entry price for this strategy would be around $9.40, aligning with the recent price dip and offering a potential entry point before the predicted price surge. The stop loss should be placed at $8.73, just below the recent support level, to minimize potential losses. The target price could be set at $10.20, aiming to capture a significant portion of the anticipated price increase while staying below the resistance level. This strategy capitalizes on the positive momentum of render while managing risk through a well-defined stop loss and a realistic target price. Based on the provided information for Solana name service, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with periods of both upward and downward movement. The forecast price suggests a potential increase in the coming weeks, reaching around $0.375. However, the resistance price at $0.3921 indicates a potential ceiling for this upward movement. Therefore, a long position is recommended. An entry price of $0.342, aligning with the recent price action, would be ideal. The stop loss should be placed at $0.325, below the recent lows, to limit potential losses. The target price should be set at 39 cents, aiming to capture a significant portion of the potential upward movement while staying below the resistance level. This strategy allows for a balance between risk and reward, capitalizing on the potential for growth while mitigating potential losses. Given the price trends and forecast for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the recent price action indicates some volatility. The forecast suggests a potential for modest growth, but with some fluctuations. The support price of $0.39085 acts as a safety net, while the resistance at $0.4081 suggests a ceiling for immediate upward movement. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.405 would allow you to buy in near the current price, while leaving room for potential upside. The stop loss should be set at $0.395 to protect against any sudden price drops. The target price should be set at $0.415, aiming to capture a modest profit if the forecast proves accurate. This strategy allows for a limited risk exposure while seeking to capitalize on the potential for short-term gains in Doge-Coin. PEPE's recent price history shows some volatility, but generally fluctuates within a range. The forecast suggests a slight upward trend in the coming week, with prices potentially reaching $0.0000265. The support price of $0.0000235 indicates a floor for the price, while the resistance price of $0.0000249 represents a potential ceiling. Considering this information, a long-term investment strategy appears suitable for PEPE. A long position could be entered at the current price, near the support level, with a stop loss set slightly below the support price to minimize risk. The target price could be set at the resistance level, aiming to capitalize on the potential upward movement. This strategy allows you to benefit from the potential long-term growth of PEPE while managing risk effectively. Patience is key in this approach, as the price may take time to reach the target price. Given the price trends and forecast for SHIB, a medium-term investment strategy appears suitable. While the historical prices show some volatility, the forecast indicates a gradual upward movement. The current price is close to the support level of $0.0000258, suggesting a potential buying opportunity. Therefore, I recommend a long position in SHIB. A suitable entry price would be $0.0000265, allowing you to buy in at a slightly discounted rate. The stop loss should be set at $0.0000258 to minimize potential losses if the price drops below the support level. The target price could be $0.0000315, aligning with the highest forecast price and offering a reasonable profit margin within the medium-term timeframe. This strategy aims to capitalize on the anticipated upward momentum of SHIB while managing risk effectively. The historical price data for Doge-Coin shows a fluctuating trend with both upward and downward movements. The recent 2-week price change indicates a slight downward trend, while the 1-week forecast suggests a potential for a slight recovery. Considering the current price and the forecast, a medium-term investment strategy appears suitable for Doge-Coin. A long position would be advisable for this strategy. The entry price could be set at $3.05, aligning with the current price and providing a buffer against immediate downward movements. The stop loss should be placed at $2.94, below the recent low, to minimize potential losses. The target price could be set at $3.49, representing the recent high and allowing for a potential profit of around $14%. This strategy aims to capitalize on the potential for a price rebound in the coming weeks while managing risk through a well-defined stop loss. Based on the provided information about Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The recent price history shows some volatility, but the overall trend hasn't been particularly strong. The forecast suggests a slight upward movement in the coming week, but the price is currently close to its resistance level of $0.00919. This indicates that a potential pullback or consolidation might be in the order. Therefore, a short position could be considered, aiming to capitalize on a potential price decline towards the support level of $0.007764. An entry price around $0.00895, close to the current price, would be appropriate. The stop loss should be set slightly above the recent high at $0.00937 to minimize risk. The target price could be set at $0.00785, aiming for a moderate profit while staying below the strong support level. This strategy focuses on capitalizing on short-term price fluctuations and aims to generate quick returns within a week or two. Given the price trends and forecast for Near Protocol, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a recent dip but are still hovering near the resistance level of $7.035. The forecast suggests a slight upward trend over the next week, with prices potentially reaching around $7.64. This indicates a cautious optimism for Near Protocol in the medium term. Therefore, a long position is recommended for a medium-term investment strategy. An entry price of $6.90, slightly below the current price and near the support level, would allow for potential upside as the price moves towards the forecast target of $7.64. To manage risk, a stop loss at $6.45, below the recent support level, is advisable. The target price should be set at $7.50, aiming to capture a significant portion of the potential price increase while allowing for some room for price fluctuations. Given the price trends and forecast for Internet Computer, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a slight upward trend, with the current price hovering near the support level of $12.767. The forecast suggests Internet Computer could climb to $16 within the next week, indicating potential for growth. The resistance is at $13.785, suggesting some consolidation may occur before further upward movement. Therefore, a long position is advisable to capitalize on this potential price increase. An entry price of $13.50 would allow you to buy in near the support level while minimizing risk. The stop loss should be set at $12.80, protecting against a potential price drop below the support level. The target price should be $15.50, aiming to capture a significant portion of the anticipated price increase before reaching the resistance level. This strategy balances risk and reward, allowing for potential profits in the short to medium term. Based on the provided information for Injective, a short-term investment strategy appears most suitable. The historical price data shows a recent upward trend, but the forecast suggests a slight consolidation around the current price level. This indicates a potential pause in the upward momentum before a possible continuation. The support price at $25.84 and the resistance price at $33.28 provide a range within which Injective is likely to trade in the short term. Therefore, a long position could be considered with an entry price around $29, aligning with the recent price action and the forecast. The stop loss should be set at $25.84, just below the support level, to minimize potential losses. The target price could be set at $32, aiming to capitalize on the potential for a continued upward movement within the projected range. This strategy allows for a potential profit while managing risk within a short-term timeframe. Based on the provided price history and forecast for BTC, a cautious investment strategy would be advisable. The historical price data reveals a volatile trend, with significant fluctuations both upwards and downwards. The forecast suggests a continued downward movement over the next week, with prices potentially dropping below the current level. Considering this bearish outlook, a short position appears to be the most suitable strategy. An entry price of $600 would allow you to capitalize on the anticipated decline, while setting a stop loss at $620 protects against any unexpected upward movement. A target price of $580, slightly above the forecast low, offers a realistic profit potential while mitigating the risk of chasing the market too aggressively. This strategy emphasizes risk management and capital preservation in a market exhibiting downward momentum. Given the provided price history, forecast, and support/resistance levels for THETA network, a medium-term investment strategy appears most suitable. The 2-week price history shows volatility, but the forecast suggests a gradual upward movement towards the resistance level. The support price at $2.376 acts as a safety net, while the resistance at $3.15 presents a potential ceiling for the short term. This suggests a sideways to slightly bullish trend in the coming weeks. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $2.85, slightly below the current price, allowing for a small margin of safety. The stop loss should be placed at $2.38, below the support level, to minimize potential losses. The target price could be set at $3.1, aiming to capture a portion of the anticipated upward movement. This strategy allows for potential gains while mitigating risk through a well-defined stop loss. Based on the provided price information for WorldCoin, a short-term investment strategy appears most suitable. The historical price data shows a recent decline, with the price dipping below $3. Although the forecast indicates a slight upward movement in the coming weeks, the potential for further decline remains. Given the current price hovering around $3.07 and the support price at $2.394, a short position could be considered to capitalize on any downward price action. An aggressive entry point could be around $3.07, allowing for potential profit if the price drops towards the support level. The stop loss should be placed at $3.13 to minimize potential losses if the price unexpectedly rises. A conservative target price could be set at $2.84, aiming to capture a significant portion of the potential decline while avoiding excessive risk. This strategy emphasizes a short-term outlook, capitalizing on the current price trend and the forecast's indication of potential further decline. Based on the provided hooked protocol price information, a short-term investment strategy appears to be the most suitable approach. The recent price history exhibits volatility, with a notable decline from $0.686 to $0.521. Although the forecast suggests a slight upward movement, the price is still relatively close to its support level of $0.521. This proximity to support, coupled with the recent downward trend, indicates a potential for further price decline. Therefore, an aggressive short-term investment strategy would involve taking a short position on hooked protocol. A suitable entry price would be around $0.572, which is slightly above the current price and close to the recent support level. The stop loss should be set at $0.590 to limit potential losses if the price unexpectedly rallies. The target price could be set at $0.521, the support level, aiming to capture the potential downward momentum. This strategy capitalizes on the potential for short-term price decline while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Artificial Superintelligence Alliance, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the forecast and support level. While the resistance level indicates potential limitations to the upside, the forecast suggests further price increases in the coming week. Therefore, an aggressive investment strategy would involve entering a long position at the current price of approximately $1.80. A stop-loss order should be placed below the recent support level at $1.78 to minimize potential losses. The target price could be set at $2.06, aligning with the highest forecast price and allowing for substantial profit potential. This strategy capitalizes on the anticipated upward momentum of Artificial Superintelligence Alliance while managing risk through a well-defined stop-loss order. Polkadot's recent price history shows a slight upward trend, although it has been fluctuating within a relatively narrow range. The forecast predicts a sustained upward trajectory over the next week, suggesting potential for growth. Considering these factors, a long-term investment strategy appears promising. Entering a long position at the current price around $9 with a stop loss at $8.39, the support price, would protect against significant downside risk. The target price could be set at $10, aligning with the highest point reached in the recent history and the forecast's upward trajectory. This strategy allows for capitalizing on the potential price appreciation while mitigating potential losses. Based on the provided price history and forecast for Filecoin, a short-term investment strategy appears most suitable. The recent price history exhibits volatility, with fluctuations both upwards and downwards. While the forecast suggests a slight upward trend, the historical price data reveals a lack of sustained momentum in either direction. This suggests that the short-term price movements are likely to be driven by market sentiment and volatility rather than a clear long-term trend. Therefore, a short-term trading strategy focusing on capturing potential price swings within the next week would be prudent. An entry price around $7 could be considered, allowing for a small margin of safety below the current price. A stop-loss order should be placed at $6.60 to limit potential losses in case the price moves against the trade. The target price could be set at $7.80, aiming to capture a potential price increase towards the resistance level. This strategy capitalizes on the expected short-term volatility while managing risk through a defined stop-loss order. Given the historical price data and the provided forecast for Conflux, a medium-term investment strategy appears to be the most suitable approach. While the price has experienced fluctuations, the overall trend suggests a gradual upward movement. The support price at $0.1731 acts as a strong foundation, indicating a potential buying opportunity if the price dips to this level. The forecast prices, ranging from 24 cents to $0.251, project a continued upward trajectory, suggesting a potential for profit over a medium-term horizon. Therefore, a long position in Conflux is recommended. An ideal entry price would be around $0.215, aligning with the current price and providing a margin of safety below the recent highs. The stop loss should be set at $0.202, a level slightly below the recent lows, to minimize potential losses. The target price could be set at $0.251, aiming to capture a significant portion of the projected price increase. This strategy allows for a balanced approach, capturing potential upside while mitigating risk through a well-defined stop loss. Based on the provided Ethereum name service price history and forecast, a bullish investment strategy appears promising. The historical data shows a general upward trend, with recent fluctuations suggesting potential for further growth. The forecast indicates a strong positive momentum, with prices projected to rise steadily over the next week. This suggests a long-term investment perspective would be beneficial. Therefore, an investment strategy for Ethereum name service would involve a long position. A conservative entry price could be around $40.50, allowing you to buy in at a price slightly above the recent lows. The stop loss should be set at $38 to protect against potential downside risks. The target price could be set at $47, aligning with the upper end of the forecast range, aiming to capture significant gains as the price potentially rises towards the resistance level. This strategy capitalizes on the positive price trends and forecast, aiming for a balanced approach between risk management and profit potential. Based on the provided avalanche price data and forecast, a medium-term investment strategy appears most suitable. The historical price shows a generally upward trend, with recent fluctuations. The forecast indicates continued upward momentum, suggesting a bullish outlook. Considering these factors, a long position is recommended. A reasonable entry price could be around $52.80, slightly below the current price and near the support level. This allows for a margin of safety while capturing potential upside. The stop loss should be set at $51.80 to limit potential losses if the price reverses. The target price could be around $54.50, aligning with the forecast and providing a reasonable profit margin. This strategy aims to capitalize on the anticipated price increase over the medium term while managing risk effectively. Given the Bitcoin price history and the forecast, a medium-term investment strategy appears to be the most suitable. The price has shown both upward and downward movements, indicating a degree of volatility. However, the forecast suggests a continued upward trend over the next week, with prices potentially reaching $0.0718. This suggests that entering a long position at a strategic point could be profitable. A potential entry price could be around 6 cents, aligning with the current price and the support level of $0.05565. This provides a margin of safety while allowing for potential upside. The stop loss should be set at $0.0557 to minimize potential losses if the price reverses direction. The target price could be set at 7 cents, aiming to capture a portion of the predicted price increase. This medium-term approach allows for a balance between risk and reward, capitalizing on the potential upward momentum while managing potential downside. Given the price trends and forecast for PENDLE, a short-term investment strategy appears most suitable. The historical prices demonstrate an upward trajectory, but the recent decline suggests potential for consolidation or a temporary pullback. The forecast price indicates a slight downward movement in the coming week, aligning with this observation. This suggests that a short position could be advantageous to capitalize on the anticipated price decline. To execute this strategy, an entry price of $6.10 could be considered, slightly above the current price and below the resistance level. A stop loss order should be placed at $6.20 to minimize potential losses if the price unexpectedly rises. The target price could be set at $5.90, anticipating a moderate decline in line with the forecast. This strategy allows for potential profit from the predicted price movement while managing risk through a well-defined stop loss. Based on the provided the sandbox price information, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with a recent decline. However, the forecast indicates a potential upward movement over the next week, suggesting a possible recovery. The support price at $0.699 acts as a potential floor for the price, while the resistance at $0.9121 presents an immediate hurdle. Considering this outlook, a long position in the sandbox is recommended. An entry price around 75 cents, slightly above the current price and below the resistance level, would allow for potential upside. The stop loss should be set at $0.699, the support price, to minimize risk. The target price could be set at 90 cents, aiming to capture a portion of the anticipated upward movement. This strategy aims to capitalize on the potential recovery while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Decentraland, a medium-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a fluctuating trend, but the recent 2-week price change shows a slight upward movement. The forecast suggests a continuation of this upward trend, with prices potentially reaching $0.752 in the coming weeks. The support price at $0.5921 provides a safety net, while the resistance price at $0.7709 indicates the potential for further gains. Therefore, an aggressive medium-term investment strategy would involve entering a long position at the current price around 64 cents. The stop loss should be set at $0.5921, the support price, to limit potential losses. The target price could be set at $0.752, aligning with the forecast and allowing for a reasonable profit margin. This strategy capitalizes on the potential for Decentraland to appreciate in value over the medium term while mitigating risk through a well-defined stop loss. Based on the provided information for ENG coin, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend, with recent fluctuations suggesting a potential consolidation phase. The forecast price shows a gradual upward movement, indicating a bullish outlook in the coming weeks. Considering these factors, a long position is recommended. An entry price around $0.320 would allow for a purchase at a relatively attractive price point, below the recent highs, but above the support level. A stop loss should be placed at $0.280 to minimize potential losses in case of a sudden price drop. The target price can be set at $0.390, aligning with the forecast price and offering a reasonable profit potential. This strategy allows for capitalizing on the anticipated upward movement while managing risk effectively. Based on the provided information for Uniswap, a short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates an upward trend, but the recent price action suggests a potential pullback. The forecast price indicates continued upward momentum, but the resistance level is relatively close, suggesting that the price may struggle to break through. Therefore, a long position could be considered with an entry price around $17.50, aligning with the recent price action and the forecast. A stop loss should be set at $16.50 to limit potential losses if the price reverses course. The target price could be set at $19, aiming to capture the anticipated upward movement while avoiding overexposure to potential price fluctuations. This strategy allows for a balanced approach, capitalizing on the potential for short-term gains while managing risk effectively. Given the price trends and forecast for Chainlink, a medium-term investment strategy focusing on a long position seems appropriate. The historical prices show an upward trajectory with recent fluctuations. The current price is near the support price of $25.86, suggesting a potential buying opportunity. The forecast indicates a steady rise in prices over the next week, reaching up to $34. This upward momentum, combined with the proximity to the support level, suggests a favorable environment for a long position. Therefore, a suitable investment strategy for Chainlink would be to enter a long position at the current market price, around $24. With a stop loss set at $25.86, you protect your investment from significant downside risk. The target price should be set at $32, allowing you to capitalize on the forecasted price increase while providing a reasonable margin of profit. This medium-term approach allows you to benefit from the anticipated upward trend in Chainlink while managing risk effectively. Based on the provided historical price data and the forecast for Aave, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with consistent price increases over the observed period. The forecast further reinforces this bullish sentiment, predicting continued price growth over the coming weeks. This suggests that Aave is likely to experience further appreciation in value. Considering this positive outlook, a long position is recommended. An ideal entry price would be around $300, aligning with the recent price action and the lower end of the forecast range. To manage risk, a stop-loss order should be placed at $280, protecting against potential short-term price reversals. The target price could be set at $380, aiming to capture a significant portion of the anticipated price appreciation. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Based on the provided price history and forecast for EOS, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a volatile trend with periods of both upward and downward movement. However, the recent price action suggests a potential upward momentum, with the price currently hovering around the support level of $1.0414 and the forecast indicating a gradual increase towards $1.34 over the next week. This suggests that EOS might experience a period of consolidation before potentially breaking out towards its resistance level of $1.3185. Therefore, an investment strategy for EOS would involve taking a long position at an entry price of $1.10, a stop loss of $1.05, and a target price of $1.30. This strategy capitalizes on the potential for upward price movement while mitigating risk by setting a stop loss below the recent support level. Holding this position for a medium-term period, potentially a few weeks, allows for the price to potentially reach the target price while benefiting from the anticipated upward trend. It is important to note that this is just a suggestion and should be carefully considered in conjunction with your own risk tolerance and investment goals. Based on the provided price information for Tron, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with fluctuations above and below the support level of $0.262. However, the recent price movements show a slight upward momentum, aligning with the forecast which predicts a gradual increase in price over the next week. Considering this, a long position is recommended. An ideal entry price would be around $0.285, slightly above the current price and below the resistance level of $0.3184. A stop loss could be placed at $0.265 to protect against a potential pullback towards the support level. The target price should be set at $0.315, aiming to capture a portion of the anticipated upward movement without exceeding the resistance. This medium-term approach allows for potential profit while mitigating risk by setting a clear stop loss and targeting a realistic price increase. Based on the historical price data and the one-week forecast for Suncoin, a cautious investment strategy leaning towards the short term appears most suitable. While the historical prices show some upward movement, the recent price action suggests a potential pullback. The forecast indicates a slight increase followed by a dip, aligning with the cautious approach. Therefore, a short-term strategy with a short position is recommended. The entry price should be set at $0.0261, slightly above the recent peak and the forecasted peak. The stop loss should be placed at $0.0278 to limit potential losses if the price unexpectedly surges. The target price should be set at $0.02388, aligning with the support price and offering a reasonable profit margin. This strategy aims to capitalize on the potential dip in price while managing risk effectively.